Here we go. All right, good afternoon, everyone. Today is Friday, January 25th, 2013. Let's go over the results from the live trading room to start with. Okay, we had the NQ nailed us again today. We're minus 16 ticks on the NQ. We were plus 9 ticks on natural gas. We were plus 18 ticks on crude oil and plus 1 tick on gold. All right. So far, for the 17 trading days in January, we are, excluding commissions, we are up $3,395 per contract in the live trading room. Okay, that's in the first 2 hours doing what we do. Yeah, we had a rough start today. Today, we started out with a losing trade on gold. We followed that up with a losing trade on the NASDAQ. Then we had a break-even trade, or maybe plus 1 tick, I think, on crude oil. Then we had another plus 1 tick on crude oil. Then we had a bigger win on crude. Then we got our gold back. Then we didn't end up getting the NASDAQ back. We took 2 NASDAQ trades and we lost both of them. But I'll go through everything. All right. If you have not taken a trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get access to our live trading room, our charts, our indicators. You get access to everything. You can download the charting platform and play with it yourself. You could even do it over the weekend if you wanted to. If you have taken the free trial with us and you want to become a partner, contact us somehow. You should have my phone number. Everybody that's ever taken a trial has been emailed my phone number at least once, if not several times. You can give us a call. You can email us at support@cfrn.net if you want to sign up, become a partner, and get into it all. Start making money consistently. All right, let's start out with the crude oil. All right, the crude actually has a trading opportunity setting up right now. We have bullish divergence, and this is our trend line. Right now, if we test the BBC and give an up close, that's a spot you could go long on the crude. But let's blow it up and we'll just cover what we actually did. All right. Let's see. Right in here we had, and I'll bring up my picture. I'm not going to refer to my picture too many times, but I will refer to it a couple of times. All right. These are the rules, step by step. You get a bullish cross of the MA1, which is this blue and red line, over the BBC, which is the green line. Okay, right here, step 1. Price pulls away from it, like it did right here, step 2. Price pulls back down, tests it, and gives an up close, which is step 3. And step 4, check to see that you have divergence. So we did all that, and we had an entry right here. We got long right there. It dropped down quite a bit, and then it took off. We ended up moving our stop up to break even when it had 4 or 5 ticks in it, and it had closed on the other side of the MA1. We moved our stop to break even. It came down, it just tapped us right here, it took us out, and then it went up about 10 ticks. It changed directions on us right after that. We didn't have any trades in there. We did trade right over here, the same thing again. Price came down, tested the BBC, gave an up close with bullish divergence. We got long there. Again, we moved our stop to break even after it closed up above the MA1. Came back down and stopped us out. The next trade that we took was over here, and we lost that one. That put us down, I think we're down 6 ticks after losing that trade. That was a close. Let me just show you the trade itself. All right. When it's got too much momentum, when the price has too much momentum to pull back and test the BBC, you just draw a trend line like this. And if you still have the divergence down here, you can take a close beneath the trend line. All right, the continuation, a down close beneath the trend line in this case, a continuation of the trend. It's confirmation of continuation of the trend. That one stopped us out, and I said, you know what, it stopped us out, but it looks like it's just pulling back up to the BBC, and that's exactly what it did. I said once it gets up there to the BBC, as long as that black line is below the green line, when we get a down close below that trend line, I'm still going to go short. And I did. I shorted right there, and I made 19 ticks, I think, on that trade. The next one was right here. We shorted right there, and we took a couple more ticks. Now at this point right here, when I executed this trade, it was 10:41 when I exited the trade. That was when we had finally made our 2 points for the morning. All right, I had told you guys yesterday, starting yesterday, I was going to start keeping track of how long it takes me to make 2 points in the morning. We started off with a couple of losing trades, so it took us a little longer to make our 2 points this morning. Yeah, a couple more trades too. But right here, 1041, we had our 2 points profit. All right. Over here, we had an opportunity we missed. Over here, we had another opportunity that we took. You can see again, it's the same thing, over and over and over again. Okay, you're doing the same exact thing. It moved up. There was an opportunity here, here, and here that you could have taken. And then we got into the close of the morning session. I didn't trade anything in here after this. This was my final trade. All right, so we ended with the crude oil plus 18 ticks on the morning. Okay. The next market over is the Russell. Okay, let's look at the Russell really quickly. And the Russell didn't have a lot of opportunity this morning. Had some pre-market, but once the markets actually opened up, there was this shorting opportunity right here. That only went about 6 or 7 ticks before it turned around. We really didn't have anything in here. Okay, we were looking for an opportunity, but there was really just a mess in here. You probably could have shorted. Yeah, you could have shorted right there, the down close on that. That didn't go anywhere. That would have turned around and stopped you out. Let's see, over here it was going into the weekly trading zone, so even though it would have worked out, you probably wouldn't have wanted to do it. It was 99. Well, you had 10 ticks down to the zone. So right here, you could have shorted right there down to the weekly trading zone. Then it changed directions. Right here it tested the BBC with an up close, bullish divergence, and a blue cycle. So you just need the up close. You could have gotten long right in there, and I highlighted that in the live trading room. That one worked out really well. Okay. That was it on the Russell. I didn't have a Russell Dom up, so I didn't take a single Russell trade this morning. Now we'll go to the gold. Okay. If anybody has any questions, just type them in here, and I will. I'll be happy to answer them for you. Okay. And here we go. Gold. Now we took a few trades. 1, 2, 3, 4 trades on gold, and we ended up with plus 1 tick. Our first trade on gold was over here. It was a close above the trend line with the bullish divergence. It stopped us out pretty much immediately. Gold had just changed directions. Came down here, and I missed this one. This was a nice trade opportunity right here. If I had taken that, we would have been even on the gold. But I missed it. And then I missed over here too. When we finally had the bullish divergence, it was an opportunity to enter here and here. Both of those would have given you some profit. I finally did grab a short over here once we closed down. Price moved down below the BBC right here. It moved down below the BBC, came back up, tested the BBC, gave a down close with the bearish divergence. Now I'll bring my picture over again. You see it's the same exact setup. This is a different market than what the picture was done on, but it's the same exact setup, same indicators, same everything, over and over and over and over again. Yeah, here's the picture for you all. Okay. I use an 8-tick stop on every single trade. In this particular case, we got short right in there on that down, this down close right here. And we took 9 ticks profit on the trade. That brought us back to break even. We had, let's see, right over here a trade that we missed. Tested the BBC with a down close. Over here, and this is where the black line comes into play, Mike. Over here, price, we were looking to short, and we're looking to short, and looking to short. And as price was moving up, we were looking for a down close below the trend line. Once we got the down close below the trend line, the black line here was right on top of the green line. You want the black line and the MA1 to be on the proper side of the BBC that you're trading. If you're going short, you want it to be below it. If you're going long, you want it to be above. If it's mixed up in between, like right over here, you don't want to be trading right there. Although, I mean, this one worked out just fine, but that's that's one of those places where you just don't want to trade. It's likely to be flattening out and possibly changing directions. Okay. Now the next opportunity was right in here. We didn't take this. It only gave a few ticks. You probably, if you didn't move your stop to break even, like I always do, when you get, when you get 4 or 5 ticks in the trade, or it gets on the other side of the MA1, or it hits the prior swing, then you may have been stopped out on this. I don't remember. It was 58.4 and it drew down to 57.5, so you would have been stopped out on that. Okay, if you didn't move your stop to break even. There was an opportunity right here to get it back, and there to make some profit, here to make some profit. I actually made a few ticks on this one. This was the close above the trend line. and once it moved up here to the prior swing high, I had locked in a little bit of profit on it, and I took a few ticks profit. Over here on this one, this was right at the end of the morning session, right in here. It was right at the end of the morning session, and I was short on that and short on the natural gas at the same time. The natural gas started to move, so I had to manage the natural gas. So I moved my stops to break even on this and the natural gas at the same time, and this one stopped me out at break even and went down. And when I get to the natural gas, you see what happened there. But let's see, it's 10, 80, 90, 200 actually. Anyway, this one ended up moving down just fine. When it changed directions over here, you didn't have any opportunity in there. The only place you had some opportunity, right here, you had a little bearish divergence, just a little bit right here. So the down close is something you could have shorted right there. This is during the break, but right here there was another one. Right here there was no divergence to speak of there. In here you do have some divergence, so you could have shorted this down close right here, but you can see it's pulling back up to the BBC. Now, when you get into a trade like this one, we'll say, what you anticipate when you have divergence like this. The entry is over here. You know, the divergence is building at the time. It's still spreading. The green line's still moving away from the cycle. And when you get into the trade, you're anticipating that the green line is going to turn around and work its way down into the cycle. All right? Just like that. Work its way down into the cycle. Whenever you have divergence, that's what you're anticipating. Okay? That the green line is going to turn around and work its way into the cycle. All right? And that was it for gold. Okay? So now we will jump over here onto the NASDAQ, my nemesis, again. There were a bunch of great trades on the NASDAQ this morning. I only took 3 trades, and 2 of them lost. See, this was my first trade here of the morning. I had forgotten I even took that, but this was my first trade in the morning, and I had moved my stop to break even after it closed down below the MA1, and you know, I took it over here on the down close below the trend line. And I ended up taking a break even on that. Price turned around and started moving up, but at the time I had this chart covered up by a gold chart, so I missed all of this. There was an opportunity right here to get in and take some profit, another opportunity here to get in and take some profit. Just looking through it right here, there was an opportunity. Oh no, sorry, there was no divergence. Right here, there was an opportunity to get in and take some profit. I finally got in over here, and it stopped me out right away. I missed this one right here. Now, and this, if we go back to the picture, I'll just walk through it instead of showing the picture again. Step 1 is the cross. Step 2 is the pull away. Step 3 is the test of the BBC with a down close. Step 4, you look down here for the divergence. Okay, over and over and over again. Same thing every single market. So the down close right there is the spot to short that. I missed it. It went down. There was another one right over here. Same thing. And right here. And in here was a continuation trade on this big move down right here. I missed all this too. You know, the NASDAQ, the last 2 days, the NASDAQ has been the market that I've been down on. I mean, it doesn't bother me so much because the NASDAQ's $5 a tick. So even though I was down, you know, I think yesterday I was down 18 ticks, and today I was down 16 ticks. And let me just check, and I'll tell you exactly what it was. Yesterday I was down 15 ticks, and today I was down 16 ticks. That's what it was. You know, it's not a significant amount, really, of money. And it's easy to make up with the other markets. You know, like the one trade I did on the natural gas made up for all my loss here on the NASDAQ in that single trade. Okay. Anyway, we had a down close right here, and it kept dropping down. Another one over here, the close down below this this trend line. I actually would have had to have redrawn that trend line. The close down below that trend line was a spot you could have considered shorting, except for the fact that the green line was already into the cycle, so there would have been nothing going on there. All right. I did take, right at the end of the morning session, I took another short trade here on the NASDAQ, and it stopped me out pretty much to the tick, and then it dropped like it should. Okay. You know, it is what it is. You take the stop outs when they come, and having a stop is actually a good thing for me. For everyone, actually, having a stop gives you control. And the more control you have in the market, I mean, that's why I use range bars, because you have more information and more control. The more control you have over what you're doing in the market, the more likely the more likely you are to be profitable. Okay, and we try to set it up so you have the most control that you can have, given what what the markets are. You have no control over what the markets are going to do, but you have control over the way that you react to the market. All right, the soybeans, I didn't take a single trade in soybeans, but you can see in here there were a bunch of them. Could have gotten long right here. Pete mentioned this to me earlier on, but I missed it. And no, I don't even know if I have a soybean DOM up right now. I do have one up, but I didn't take any soybean trades in here, and here, and here, and here, and here. Those are all valid trades on the soybeans. On the short side, right in here, you could have shorted right there on the soybeans and shorted right over here on the soybeans, and they did really well all morning. Now that I'm looking at it, I'm wishing I would have traded the soybeans, but I didn't. And these spots where I'm circling right here are spots where you would have entered. Okay. Yeah, there's two Kyles. There's always at least another one, Kyle. Just so you know. There's always at least one more. And that was the soybeans. Okay. On the ES, today was an odd day on the ES. We had two opportunities. There was this one right here that went down pretty well, and this one right in here that went down about a point. Okay. At the end of the morning session, there was more opportunity on the ES. I hadn't really noticed it, but right in here you could have gotten long. The bullish cross, the space, pullback, test, up, close, bullish divergence. Okay, the same thing works over here on the ES, again and again and again. Okay. Now over here, natural gas. We took one trade on natural gas. We tried to enter this one, but we didn't get filled, and then it turned around and it started to drop. And we entered here on the close below this trend line. Oops, on the close below that trend line, we entered right there, and it was a nice shorting opportunity right there. Okay, nice shorting opportunity, and we took 9 ticks profit on that one. And that's it, guys. That is it. So on the morning we were plus $90 a contract on natural gas, minus $80 a contract on the NQ, plus $180 a contract on crude oil, and plus $10 a contract on gold, all excluding commissions. I think that comes up to plus 200, which is the equivalent of 4 points on the ES. And as I said earlier, that puts us at plus $3,395 a contract for the 17 trading days of January. Okay, if anybody has any questions, you can email us at support@cfrn.net. You can call us. You can call Bert and Leslie. Bert and Leslie's number is 1-866-928-3310. That's 866-928-3310. And that's it, guys. I'm going to wrap it up here. I hope you all have a great weekend. And for everybody who is out there right now, who I've been talking to over the past couple days, and just give me a call when you get a chance, okay? And Daryl I'll send you off something. Daryl will give you information about all this if you want, okay? And that's it, guys. Going to wrap it up.
All righty.